The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray, feeling good, Lewis. We'll start out the day like we usually do, looking at the German DAX and the FTSE. As you can see, both of those made relatively clear bottoms. One was at the 61% retracement on the DAX and 78% retracement on the FTSE, and they've had a relatively substantial rally. Folks, I've been doing this stuff in stocks and commodities since 1959 when I put my first trade on, which was elastic stop nut. It was the very first plastic little nuts and bolts thing, a little different than others, the little white deals that you see occasionally. But that was my first investment. My uncle gave me $200 to put into that stock to buy a car. When it got to $8, I sold it and I had a $400 profit, and I bought a 1949 Mercury. That was my very first car, so I remembered it. Folks, I've been doing this for so long that I finally figured out why stocks go up and why stocks go down. You stop and think, what's happening here with this virus thing over the past 9 months, 10 months, started back in January, I guess. And my goodness, it shut everything down. And how could stocks be up? Well, folks, I figured it out. I just want to show you this. This is a nice little painting that our grandson made for us. I just wanted to show it to you here. He did a beautiful job on this. The problem was this is being offered by Sotheby's today, folks, by an artist named Jean Dubuffet. And you're not going to believe this. This is without the frame. You don't get the frame with this, but you want to take a guess what this painting's going to go for? And that'll explain to you why stocks are where they are. Because they are the asking price on this, the starting bid is for $200,000. No, very good, very close. You got the two right, Marshall, but no, it's $200,000. $2 million was my guess, but if they can get $100 million for a Jackson Pollard, I guess they can get $200,000 for this. But this explains why there's so much money washing around and people want to buy things and sell things. That's my guess. We need to pay very close attention to the dollar index in euro today. We focused on that in the newsletter because we were due for this rally that we're getting. We should get to about that 118 level in the euro. We covered those at the 116.50 level, and we put them out at 117.80. We should get to that 118 level. Very close is my guess. So we'll see if that's going to be if that's going to happen for the rest of the day. So we'll watch that as we go through here. We want to take a look at some of the things that some folks sent me for just for points of interest. I would think this is here's one showing the even years in 2000, 1960, 1990, and of course we're at 2020. But you'll notice in these even years ending in zero that the markets have had a tendency, to move down. But hey, take this for what it's worth. You got to look at them one at a time, folks. That's basically the bottom line. I don't think you can put too much emphasis on it because, you can see each one of those arrows is at a different era. And, some of these markets have broken quite a bit. Look what we've done here, folks. I mean, we've gone all the way down and all the way back up with the worst news, personally, that I've ever seen in the markets. I mean, I don't think I've ever seen it any worse. I mean, it's just one thing after another, and yet the market just keeps going higher and higher. The only thing this can be is the Federal Reserve is, priming the pump and keeping it up here. How long they can do this for, I don't know. I don't know if anybody else can either, but who knows? All I can tell you is it doesn't look very bearish when you come in here and you see the president goes into the hospital, the market breaks a little bit, and boom, it comes right back to where it is. So we'll see here. Also, someone's mentioning that 1950, 1970, 1980, and 2010 were not mentioned in this. See, so it's missing a lot of data. So I think you have to pay attention to that. Just, you got to find out what you have to do for yourself, folks. I try to give you some ideas in here. For heaven's sakes, sometimes they work, sometimes they don't. But that's really what you're looking at. What I was watching this morning, this was on my watch list, of course, was the euro. Stop, Larry. Give me a break. Is the crude oil. Let's get the crude oil up here. And this is what I was looking at this morning. We had a perfect 3 drive to a top pattern. That is as perfect as it gets. It made the first objective of $500. It's now rallied back to above the 61% retracement. So the key to remember here is the area of 39.00. And the reason why that is important is that's a 61% retracement of that whole range that we made down the other day. So that's it. Okay, yeah, that's right. It looks like the paint by numbers are much better than these. But I mean, when you look at something like that, give me a break. If I paid $200,000 for that, my mother would come out of the grave with a, pitchfork to stick it in me. I mean, I just can't believe anybody would pay for something like that. But then you look at some of these other things that these artists, that people love it. And unfortunately, I don't have the aesthetic ability to enjoy that kind of stuff. It's just truly, it blows me away. And when I see them, I say, I don't understand how they could go for that. But I can see the old masters and stuff, but the rest of it, I don't understand how they can get these prices for that. $200,000. I mean, my kids' pictures on the refrigerator were better than that, but who knows? Also, folks, I lost a very, very dear friend Saturday morning, early in the morning at 1 o'clock. John Raffoni passed away up in Avila Beach. John was my second person I met when I moved to California in 1965. And I met his father first, and then he introduced me to his son. And John was running the offices for Bateman Eichler in San Luis Obispo, Lompoc, and Santa Maria, and Paso Robles. There were like 7 offices that he managed all those years, and we became very dear friends. John was one of my first customers at Drexel Burnham, and we did very well during those years. And in 1986, I moved up there and lived with him at the beach there from 86, 87. We were both going through divorce, and it two fun years, and made a lot of nice friends up there. This is just a few of the people that ran through that house having dinner with us, folks. G.D. Spalding, he was the actor in the movie The Godfather. He was the crooked senator. Jack LaLanne was there all the time because he was a fishing buddy of John. Ross Perot was there probably 3 times. Malcolm Smith of Merrill Lynch, Pierce, Fenner, and Smith. He was there. He lived in Paso Robles. And here's one you got to remember, folks. L. Rod Hubbard. He ate there probably about 4 or 5 times, and he lived in San Luis Obispo. And actually, he died on the beach there in San Luis Obispo, about a half a mile from the house. He was walking and just had a major aneurysm, and he didn't even get to finish his sentence. He died on the spot, and one of our doctor friends did the autopsy on it. So if you hear if he's still around, don't believe it, because he did pass away. And but he also was a friend of Byron's too. But he was a real quiet guy. He really didn't say very much. But I didn't go into that Dianetic stuff, so I never did too much here. Where to get back, I want to talk a little bit about the Fang stocks, because I thought that was going to be the real key today. And of course, the key became the lock, and I have to figure out what happened. So,
if you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and on Wednesday we're going to have Jeff Huge of Alpha Insights will be our guest. He's really got some great stuff. He's really a tremendous technician, so I think we'll enjoy that quite a bit. I would like to mention one other thing about the Malcolm Smith. This was one of the most amazing weekends that I'd ever had in my life. This was on October the 16th, which was a Friday. It was his daughter's birthday. That's when the Dow was down 104 points into the big day of October the 19th. But they had a big party in Paso Robles that we attended. Then on Saturday, I had to go all the way down to, we didn't have to, but I had a lot of fun, went down to the Bel Air Country Club because Eddie Horowitz was getting married on Sunday the 18th. And then, of course, the 19th was the big crash. So that was a very exciting 3 days as I recall. So those are just a few of the things that I remember from those good old days. But anyway, he will be missed. He had 3 great kids, 5 grandchildren, and he was loved by a whole lot of people. And anyway, that's the part of getting old, folks. You got some of your friends pass away, and there's nothing else you can do about it. Unfortunately, this has been a big year for that for me. Missing so many people, but fortunately none of them have had the COVID. So we're going to find out if that's going to be in the future for some of these other things, but we'll be able to watch that very, very closely. Mr. Z is telling us that wheat's jumped quite a bit overnight because of the Russian Black Sea wheat balance has had some problems, and that's we've been watching that quite a bit. But wheat came off of that 3 drive pattern. We'll show that a little bit, and then I wanted to mention the thing about before I do I better do the wheat first, otherwise we'll be able to see where we are. We came down, and you'll notice we made major support after that 3 drive to a top pattern, and now, folks, we're breaking out above that again. So we're almost at a double top. We're not too far away from the $6 level, which is a double top, and these things will be starting to move better. But they are starting to move a little bit, but not nearly as much as you would think, given the fact that you had all of these things happening with the the crop. I mean, this stocks in all positions was such a big surprise. That's one other thing that I have to cover too. Thanks for reminding me, Mr. Z. You folks have asked me several times in emails over the weekend. Two questions was, how do they handle stops when you're trading? Because you have your platform there and you put your stop in. What happens when prices gap down through your stop? Well, once the market goes, if you have a stop in, let's say you have a stop in the S&P at, let's say, 33.65, okay, and all of a sudden it jumps to 33.75 and there's no trades between 33.65 and 33.75. Once it goes through 33.65, the number of your stop, it becomes a market order, and it gets filled on the very first price that's available at that point. And if it's 33.75, that's where you're filled. That's why you have a stop in. Don't ever use a stop limit, folks. The stop limit is absolutely the worst order to ever use. In fact, they should be disallowed by all brokerage houses and exchanges. A stop limit means that you're going to get stopped, but you have to be stopped at your limit. On a situation like this, if you have a stop at 33.65 and you have a stop limit at 33.65, you're not going to be filled. You're not going to get filled at the higher price at 33.75. And believe me, there's been times back in 95, if you'll remember, when Greenspan came out in the middle of the trading day, dropped interest rates by 1%. And the S&P, I think, jumped 30 handles. And that's when 30 handles was a lot of money. So that was a really a big deal. That bankrupted a whole lot of traders down on the CME. That was the biggest number of seats available at any time was when that happened. And I'm sure he didn't share that with his good buddy. What was the guy's name from Citibank? Can't remember his name now. Doggone it. He was one of the triumvirate guys. It was Bernanke. No, it was that's okay. No, it wasn't. No, Sandy Lyle. He was with American Express. And let's move on to what else I wanted to talk about, and that's these Fang stocks, because this is what they look like. Coming into this today, this is an incredibly bearish pattern in Facebook, but with the market gapping up like it is, you'll see here Facebook went right up to the 382 retracement there, just spot on, and then broke down about $10 a share. It's probably going to be above it today, but if it doesn't get above it, it's still going to be quite bearish. That was a bearish one. Another one that's probably going to be moving up quite a bit today, and that is the big daddy rabbit, which is Apple. You'll see that it also made a 382 retracement there on October the 2nd and then came down for 4 days. But it's got to get above that 118 level to break that. And the way the market is as strong as it is this morning, we could easily see that we're looking at a market that's going to move up quite a bit. So let's remind ourselves that that's what we're doing here. Another one that doesn't look that bad compared to the others, and that is Amazon, but it's at a 50% level and not at a 382 level. When I saw all five of these Fang stocks, the way they looked, and the fact that the NASDAQ did not look that good, then I would say, well, I'm assuming that the market was going to be down, on Sunday night and Monday, but that in fact, really didn't happen. You can see here, this is where we were Sunday night. Let's just get this up here. I'll show, shut the front door and raise the rent. Got to get this out of the way here a minute and see where we are. Okay, that's fine. Okay, well, we just made the 61% retracement in the crude oil, folks, at 3,900. The high was 38.99. So let's see if that's going to hold or not. Let's move up here to the next one, and I wanted to show you this NASDAQ because this is what I was looking at Sunday night. You'll notice that we got up to a 382 retracement again Sunday night. We came all the way down. You see the little red dot on the side there? That my limit minder, that was the target. The low was 11,270, and then we rallied all the way back up. So it still has a positive bias here. That's basically what you're looking at. So you can't really fade that. There's no question about that. That's my 2 cents worth, but that's what it's looking like. Now, all I'm looking at on the charts, folks, I'm not looking at any fundamentals. I don't know what's going up in that or not. So we'll see what's moving on and go from there. Okay. Here's a couple of charts from Larry Williams that I think are well worth looking at. These are things that he sent out on one of his talks that he did for stock charts. Yeah, but he's looking for a low to come in around the 20th. In the stock market, that's basically a 72-day cycle. But frankly, if you look at this, it doesn't look very harmonic or anything. You know, I'm showing you this because he put it out there, but it doesn't look like it's got any harmony, you know, to it at all. You know, that's the bottom line. So we'll see. Okay, now another one that I wanted to show you from Larry, which is a pretty good, and this is one that he really believes in strongly. This shows the winners and the number of people that are long gold versus the number of people that are short. And you can see on the bottom side, you can see that the commercials are not long gold. It's the public that is long the gold. And look, we're at that real key level at 1290. So there's a possibility here we could get a correction here. 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, and I was trying to think of the friend of Mr. Greenspan. It was Bob Rubin, who was running Citibank, and of course, Bob left his job at Citibank to take over as United States Treasury Secretary, and one of his first jobs was to work on the debt that we were having with Mexico, $4 billion, and he worked out a great deal where Mexico, which was in default and ready to let those go to bankruptcy, well, they were kind enough to let the Treasury pay it back, so all the investors didn't lose any money on that. You have to love it, folks. You can't make this stuff up. All right, let's move on to the futures market. What we were talking with Mr. Z about it just a little bit. We've had these big moves here. I want to bring up soybeans again because soybeans still have a tendency to go a lot higher. We're getting ready to take those old highs out. I think we're up around that 1038 this morning. I thought that's where I saw it this morning. Corn is still moving up. It's up at around the 381 level. And part of this is the fact that China is in really serious problems because of all the rain that they have there. I mean, it's really devastating the crops, and so they're going to be in the market for quite a bit. And there's no more, after this crop, which we're harvesting right now, we're in the harvest moon section right now. We don't have any more beans or oil or meal coming out of there except from Brazil. So anything coming out of South America have any problems there? We're only one season away from a really bad situation. And we certainly don't want to see any bad parts of seeing that. So we'll watch that as we go through here. Marshall's posted a little thing from Amos Hotstetter. It says, take care of your losses and your profits will take care of themselves. When I met Amos in 1973, back in Commodity Corporation, that was a little plastic sign that he had right on his machine, right on top of his Reuters machine. So I remembered that very, very well when I saw that. That was pretty good. And that's true. If you take care of your losses, the profits will take care of themselves. As a matter of fact, folks, if you ever get a margin call, you should never first of all, you should never answer a margin call. You should liquidate down. The reason why, your opinion of the market is wrong, and you don't want to expose yourself to any more loss. But even more important than that, let's assume you have two positions on. Let's say you're long soybeans and they're doing pretty good, and you're short the S&P and that's not doing very good. Well, the one thing you want to do is don't take off the good one. Let the wheat or let the soybean position go. Take off the one that's hurting you. But that's not what people do. And when Mark Douglas was, doing this research on all this stuff with these 10,000 accounts from Merrill Lynch back in 1983, when I first met Mark, that's what he was seeing all the time. What they would do is they would take off the wrong position. They would take off the loser and not the winner. And that's exactly the opposite of what Trader Tom does. He actually comes in there and does the right thing. So we'll see how these things end up. But we got some pretty wild things. Let me quickly check to see what the markets are doing here on the opening. We're down here. We got up to 3370 in the S&P. That's good. Now, we hit the 78% level. Oh, boy, that's good. The gold's starting to move up. There we go. This is good. And hold on. Let's get to see. I think we just took out the old 78% level from last night. We sure did. We made that out. Wow, very interesting. And that's an interesting thing that's going to be happening here this morning, folks. I'll just share with you, just for kicks and giggles here, what I'm watching here with my AI program, just for the heck of it. This is not a recommendation. This is just, something to watch to see if it's going to mean anything or not. But very interesting to see how these markets are jumping around quite a bit. We got up to 1916 now if we can get gold above the 1922 today, folks, that is going to be a very, very, very substantial thing to have happen, because that means you could have one heck of a run here in the market, and it would be a very, very substantial one. So watch that level of 1922 in the gold market. We talked about that, I believe, in the futures market section of the market. Let's get this up here. 1 second, folks. It'll just be a second to get this up here so we can take a look at it. You'll be able to see here, if we get above this level, how bullish it could possibly be. And Ruby is asking me to take a look at copper, the metal, and we'll do that in just a second. That move last night in the gold, we got down to the 382 retracement, folks. And from that level, we just skyrocketed up and just never looked back. So let's check and see how the old copper is doing here this morning. And give me 1 second here. Hold on, copper. Let's get this thing up here so we can see it for Ruby. Copper is the HG, isn't it? Yeah, there it is. Hold on just a second here. We'll put up a hourly chart so we can see it clearly. Oh, it's bounced up pretty good. We've we had some trouble up there. If you remember, it went right up to that 71% level. Let's get this up here and you'll be able to see it. We're backing off right now to the 293 level, which was the low. Let's just double check this for Ruby to see if that was a 382. No, it didn't even come. Wow, it came within a half a penny. So that 293 is a really strong support there. It's 295 right now. And there's a small, let's just draw that in because that's a nice little Gartley. Son of a gun, shut the front door. Very good eye, Ruby. Here, let's get this up here and you'll be able to see it. Not trading copper, probably should be. Hold on, there you go. You'll see we went right down to it and it's held so far. So 293 has to hold in the copper for it to continue to be bullish, but it does look pretty good from this level right now is what we're paying attention to here early this morning. Now, the other one that I think is super important, of course, is the crude oil. That is that 39 level. The high has been, I think, 39.10 or something like that. But that's really close to an area that should be really, really strong resistance because that's a 61% retracement of that whole move down. And that was a big move down, folks. You know, we went from 44 all the way down to 36 and change. So that 61% retracement is very, very important. I think you have to pay attention to that for sure. Someone's asked a question about Apple. Hold on, we got another question coming in here. 1 second, and we'll see what's happening here. And we have Mr. Z on the line. John, are you there?
Good morning, Larry.
Good
Glad
morning,
to hear
my
you
friend.
had
How are you?
a nice weekend.
Yes, it was. It was pleasant. I lost a good friend, but you know I was expecting it because he was extremely ill and he was on ventilator. Didn't have COVID or anything, but he was having a lot of problems. But sad part.
Always good to celebrate the life of good friends and all those years. That's something to be grateful for.
Yeah, the sad part is you can't go to travel to be with them. You know, I mean, it's kind of sad. All right, my friend, what are you looking at today?
I'm calling to ask if you would do us, me in particular, but us generally in the Tiger's Den and your sphere of fellow traders, in the next weeks, speaking with Rich Anderson and a flash from the past, Mr. Cy Monley, if possible. Larry, the reason being is
we have to take a break.
We have new bull markets emerging in all the ag commodities, actually all of them.
We have to take a break, buddy. Stay with us, okay?
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
We're back and we're talking with Mr. Z. John, we're talking about corn. I will try to get Rich on for sure, but he's got alligators all over his his desk these days because he's so very, very busy. You know, he runs the operation for Farm Bureau now. And so he's really got a lot on his plate. But I will ask him if he can come on. He certainly will. But I'll have Rich on. And what would you like to ask Rich when I have him on?
I'm looking to get input from the real pros regarding how things are tightening up globally in the ag markets and input on emerging adverse growing weather threats throughout the globe. Just by way of background, I'll just share this with you, Larry. Of course, we can all look at the charts and see that corn, wheat, beans, cotton have all rallied off the lows scored this year. But looking ahead, of course, we're out of growing season here in the U.S., but it's worthy of note, Larry, that whereas in February in the continental United States, moisture levels were pretty much average. But in these 8 short months since February, a great deal of the western United States is now in serious drought conditions. Now, we're coming into winter, and we could have a wet winter, of course, and that could change things. But we've had numerous times in the past where we go into a fall where it's dry in the U.S., and that pattern continues. And then you get into planting season the following year, and you're faced with lots of dry ground in many places, and you then see an explosive bull market. And in fact, what I'll share with you, we don't have to go back far in time to see an example of what I just described. That occurred in 2016 and 17. 16 up in the northern plains, it was quite dry, stayed that way through winter. Then when we got into planting and growing season, it did not improve, and that's when we saw Minneapolis wheats between April and July rally something like 70% in a very abbreviated period of time. So I want to be prepared looking ahead with as much understanding as I can get my hands around. So I'm prepared to trade effectively and capitalize if, in fact, we have, adverse growing weather catalyzed bull markets and hence my request if we could listen to you speak with Rich and Cy, just so we can get up to speed on all that. So that's my question and the why. So no trade ideas to share here, but that's kind of where my thinking is heading.
Okay, so you basically want you want to ask them where's the low and where's the high, and when to buy, when to sell.
I love that.
Is that pretty
exactly.
much how you? Okay, I think we can cover that. Yeah, well, we'll have Rich on. We'll have Rich on tomorrow, and he'll make something up for you. No, Rich really does follow the weather. He really, he's got a whole service. Well, Cy does too, because they have so many farmers that they hedge for. But they have a lot of those weather reports. But you can't go farther than 6 or 8 days in the weather without, having something go wrong. So we'll get a rough idea. But right now, the corn's not going crazy. Wheat certainly is, but beans aren't, and neither is corn. So whether that's going to mean anything or not, we have to keep that in mind. So we'll just keep a close eye on it. That's all we can do, correct?
Exactly right. And I thank you in advance for any conversations to have with those two folks. That'd be great.
I will. Hey, thanks for calling in, John. We really appreciate it. You've always got some great stuff, and what you do for the Den here is unparalleled. Folks that are in there watching him, he does a fabulous job of, pinpointing these things as far as, what really looks good. We've had hogs in there that was one, and corn and beans and just cocoa and coffee even. He's had some of them were just, absolutely spectacular. One of the ones I haven't traded coffee, but just take a look at, when he was interested in coffee, folks, was you'll see it down here where just get it up here, because we were way down there in June is when he was looking for the market to bottom. And just give me a second so I can get it up here. So take a look at it. He had all the way up to that 3 drive to a top pattern at 1.27 expansion. Then we had a drop from 136 all the way down to 106. And look where the key support came in, folks, right at that 108 level. And John was pointing that out to us, and you've seen it had a pretty good rally. We've already rallied a nickel from that bottom, so that's another good sign that these things don't work all the time, but when they do work, they work pretty well. Now, I've been asked to share that chart from Stan Harley that we've looked at several times before, and that's those Fibonacci numbers going back, for many, many years. And it says that this is the 89th year coming into 2020, and we're only a few months away into that. Now, that's a long way from where we are, so a lot of things can happen during that time. And with the election coming up, it's going to be pretty wild. But these markets are not responding pretty much to anything, folks. They're going up on bad news almost all the time. And so that's not a sign of a negative market. Somebody knows something more than somebody else because they're willing to bid up for it. That's the only thing you can do is when you're watching that is that's what's happening. So that's the key to to watching what's going on. That's the only way I can figure it. I'm a technician. I can just look at the charts and look at the S&P here. We're trading at 3370, 3367. Right now, we've been as high as 3372. The 78% retracement of this whole move up came in at 3370. So we went 2 points higher than that so far. All we did was take out the highs of October the 4th so far, which was, October the 4th, which was Sunday night. And we went all the way down to 33.45 and then rally another 50 handles up. So these markets are not acting badly. Now, maybe they will eventually, but certainly not right now. They're not acting bearish. They really aren't. And believe me, I'm certainly looking at that. Now, someone just asked me a question. Are we looking at a head and shoulders pattern here in the S&P? And if you look at it real closely, we'll just get this up here. You are looking at the crude oil. No, the crude oil is sold and hasn't moved enough. No, the crude oil would want to be at least 50 points, at least 50 points in the crude. I haven't checked it lately. What was it last? It's well, we sold it at 3,900. It's at 38.84. That's not enough. You need it to get down to at least 38.60 would be the first place to cover. But you'll notice here on the S&P, this hourly chart, you've got a head and shoulders pattern. The right shoulder is a little higher than the left shoulder, which is sort of positive. But, unless this market can get above 33.76, that is a head and shoulders pattern, and it could very possibly have some type of a reaction in here. How much, I don't know, but the overnight correction only went down to 33.46, which was pretty much nothing. That was barely a 382 retracement. I think that's what it was. Nope, didn't even come close. It missed it by 5 points. So this market is not acting bearish, folks, in the stock market. It might eventually, but right now I don't see anything here on the hourly chart. If you look at it on the 15-minute chart, nothing.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. One of the stocks we were looking at before the market opened was Apple. And I'm really shocked at the fact that Apple really didn't do very much. I mean, it's up, I think, about not even $1, right around $1. You know, that's not really very, very much. I mean, it's got to get up to 115.5 just to fill the gap area. So this is not acting very bullish. So those are a few signs that I've been watching here with these Fang stocks, because they've been the leader of the pack all along, but that can change perfectly. Now, if we'll take a look here, I wanted to talk just second here about Bitcoin. Getting a lot of news out there on Bitcoin because of what's going on in the political environment. But you'll notice that we've been in this really, really tight range from 10,000 to 11,000 here for well over 3 weeks. It's actually been more than a month right now. We're in the 5th week, and we're about ready to move out of this direction now. From what you're looking at right here, it could go either way. The only positive thing that you're looking at here on the crypto here is the fact that you've had these 3 higher bottoms starting in September the 3rd, another one on the 20th, and another one on October 2nd. So they are making higher bottoms, but it needs to clear the 11,900 level to get it moving in the right direction. We'll see if that's going to continue or not, but that's what we're paying very, very close attention to this morning. The key level today to watch in the S&P, if we make a new high above that 3380 level, that's going to be quite positive. We're a little bit of resistance area right now in that, so that's another one to pay close attention to. Also, the bonds are under a great deal of pressure down over a point today, and they could easily give up the ghost and fall totally out of bed here. So those are the one. And of course, the crude oil. The crude oil hit the 61% retracement at 3,900. And as long as we don't get above 39.20, that should make the first objective at around 38.50. I would believe would be the first objective we'd be looking at there in the crude oil, because it was down big last week, and all we're doing now is correcting it. It was extremely, oversold, and now we are correcting that. All right, folks, we'll see you all tomorrow. Live every day in an attitude of gratitude, and may God bless.